I went to a Robert Allen event. I don't know if you know who Robert Allen is, but he was always touted as the founder of No Money Down, Other People's Money. And his claim to fame was a book that he wrote called No Money Down. But what he challenged the world and said that, hey, put me in any city in the country, take my wallet, and by the end of the weekend, I'm going to have real estate that I own, and I'm going to have money in my pocket. So the St. Louis Times took him up on that and put him in the city of St. Louis, took away his wallet, left him $20 on a Friday afternoon, and picked him up on Monday. By Monday, he had 4 properties that he owned, and he had $4,000 cash in his pocket. Now, I tell that story because I think that in real estate investing, if you put your mind to it, anything is possible, and the potential is there for each one of us. I remember this because I went to a free seminar. I went to a one-day event, and at that one-day event, they sold me on a weekend, and I went to that weekend event. And at that weekend event, I got so inspired and learned so much that on Monday morning, I went home, I started scouring the newspaper for real estate opportunities, and I found some. And I actually went out and on Monday bought my first investment property. So I tell you that because I believe that each one of you can walk away from this and create a real estate business for yourself and buy that first or your next piece of property, multifamily specifically. So let's talk about a couple of housekeeping things here before we jump in. But I want you to go grab a journal, grab something to write with, take some notes. I'm a huge note taker, and I believe that by taking notes, we retain more information. Any seminar I ever go to, I walk in, I carry 2 notepads with me. And the reason I do that is one notepad, I write down notes, general ideas, thoughts that the speaker or the presenter is giving. And that other notepad are things that I want to implement into my business right away. And here's what I can tell you is that my staff on a Monday morning after I'd come back from a seminar or a few days at an event would dread the fact that I would throw down this yellow notepad on the desk and say, hey, here's the 10 or 15 things that we're going to implement right away to really move our business to the next level. So I want you to discover some things today that are going to help you move your business to the next level. Listen, this webinar tonight is designed for you. It's been 30 years in the making, right? But it's designed for the brand new investor, somebody who's maybe just thinking about real estate investing, somebody who's just thinking about getting into real estate. And they've raised their hand and they've said, hey, I believe multifamily is this new thing, new idea for me that's a way for me to build a business to take advantage of economies of scale, to hedge myself against upcoming inflation and build a future for myself. Other people might be the investor who's already in the business, who does single family fix and flips, who does single family real estate investing, and they decide, hey, you know what? I want to go to the next level. I want to take my business and build partnerships, build strategic alliances, and build a real estate business that I can create cash flow to get out of the rat race and build future wealth to keep me out of the rat race. So a lot of these things we've learned along the way, and I'm going to share a lot of those with you. So one of the things that we're going to talk about as we get into this, actually the first question that I'll have for you is, how many of you think that I'm here and at the end of this that I'm going to try and sell you something? Okay, raise your hand, throw it in the chat if you want. I'm not going to disappoint you because at the end, I'm going to talk to you about an event that will help you grow your business, that will help where you're at with your real estate business. But here's my promise for you. My promise is that you're not going to be disappointed. If you hang in there with me over the next 90 minutes, you're going to gain some clarity on your real estate goals, your desires about real estate investing. By teaching you, I'm going to teach you strategies that you can actually walk away and implement so that you can have more of the things in life that really matter to you. What might those be? Those might be your family. They might be opportunities that you're trying to seek in your own life. You know, how many people here tonight actually would like to walk away and buy a multifamily apartment deal after this event. Here's one problem. We have one challenge tonight, and that challenge is that I can't teach you everything that I've learned in the last 30 years in the next 60 or 90 minutes. You're gonna want more. I'm gonna give you enough information that's gonna cause you to really want to learn more, want to know more, and want to go to the next level. This isn't going to be like other real estate events that you've been to where they maybe promised you a bunch of meat and wound up being just a bunch of fluff, but this is actually going to help you build your business. Some of you will want to come to the 3-day event. Some of you won't want to. Either way's okay. I remember a quote I heard one time from Henry Ford. He said, "Some will, some won't, so what?" And that's how we look at it, right? And that's how we should really look at things in our life. We've all been to those seminars, haven't gotten what we really thought of, but I'm sure tonight that you're going to get a lot that you're looking for. So here's what I want you to do. Hopefully you grabbed a journal, hopefully you have a notepad, but I want to start with a simple exercise. So I'd like you to write down some answers to these questions. And what I'd like you to do is, if you had to look at your life today and look at yourself personally, what's the biggest challenge you might be facing in your own life? What would you like to accomplish, or what would you like to complete? What is something that would help you grow? How about professionally? What might be the biggest challenge in your professional life? So write down some answers to this, and nobody's going to see them. I'm not going to ask you to share them. I'm not going to ask you to give them to us. All I want you to do is write them down, because I'm going to have you keep this, because we're going to refer back to it a little bit later. How about the biggest financial challenge in your life? What does that look like today? And what's your annual income? And if it's not where you want it to be, where do you want it to be? So, a lot of these things are things that we wish for, right? Well, I want to take those wishes that you might generally think are just wishes for you, and I want to actually create a space for you to be able to execute on those wishes and to be able to go accomplish those. You know what? I'm sure everybody on this call's got a lot of runway left in their life. And by being able to execute on some of these promises and some of these things that they desire, you're going to be able to accomplish a lot of that. I have a question for you. Have you ever been to a real estate event like this? Okay. And maybe you have, maybe you haven't. But what I want to tell you is I'm not a performer, right? I'm not somebody who's up here just putting a show on for you. I'm not someone who has just read a book or been to a seminar or heard from somebody else and decided that I was going to go teach this. I'm actually a real estate investor just like you. I roll my sleeves up every day. Matter of fact, I'm giving this presentation from Tampa, Florida today. I live in Chicago, but I'm giving this from Tampa, Florida today. I've been down here doing the due diligence, the inspection, the physical inspection on an apartment building that we're buying. And I'll talk a little bit more about that throughout this presentation. But you know what? I'm just like you. So I'm not going to jump on an airplane and disappear after this or give you some information that you're not going to be able to work with. I'm going to help you grow and help you move to the next level. Let me tell you a little bit about me and who I am, tell you my story. I've been in real estate for 30 years. I actually started in the real estate sales business as a sales agent. And what's interesting is I was in the general contracting business. I woke up one day and had just kind of really decided that I was burnt out. I couldn't do the business anymore. I didn't want to do the business anymore. I was married at the time, looked at my wife and said, I can't do this anymore. I'm just exhausted. So I decided to sell the company. I sold my business. I took a year off. And during that year, I did a couple of house hacks. Now I say that because today house hacking is the sexy thing out there. People do it. We didn't think that was not a chic thing to do at that time. But I've always believed success leaves clues. See, I heard Jim Rohn years ago say, success leaves clues. So I always knew that if I followed other successful people, that ultimately I'd probably be successful. And that's what I want you to be able to accomplish tonight. So I sought out a real estate agent or met a real estate agent during that year who was extremely successful. And I went to him and talked to him and I said, hey, Todd, I would really like to go in the real estate business. He said, Mike, I think you'd be great at it. He said, I think you're good at building relationships and your follow-up, you're going to do well. So I decided to go in the real estate business. My first 9 months selling real estate, and actually, let me back up for a minute because I said to Todd, I said, hey, could I follow your team around? Could I shadow you? And he said, no. He goes, what I want, I'm going to make a cassette tape for you. And now I'm dating myself a little bit because I don't know that we could find a machine today to make a cassette tape on. But he said, I'll make you a cassette tape and I want you to listen to it. And I listened to that tape over and over and over again. I actually think I wore it out. But I took those fundamentals, those basic strategies that he taught, and things like how to find and source deals that are on the market, how to find sellers, how to sell property. In my first 9 months in the business, I sold 78 houses. I went on to build a team selling 125 homes a year. And beyond that, we did that for about 8 years. 2005 came around, and I saw at that time that the market was starting to shift. And I knew that there was going to be a change in the marketplace and that I'd have to go do something different. So I always had wanted to go in the apartment business. I always wanted to be in the multifamily business because when I worked when I had my construction company, I did a lot of work for Inland Real Estate. And Inland is a very large syndicator today. They started out as one small operator, and today they're in every asset class in 80 countries. So they're probably the largest REIT. A REIT is a real estate investment trust. Gives you an opportunity to invest in real estate passively and to earn a return on that passive investment. But in that real estate, they're the largest in the world today. So I said, I understand this model. I understand the private equity world. You raise private equity, you marry it with a great real estate deal. The two of them come together, you stay in the middle, and as long as everything goes well, everybody makes money. So what I did was I syndicated my first deal in 2005, and I didn't know anything. And I'm going to talk about my first deal in a little bit here and how that all went. But after that, I went out and I raised $18 million, bought $60 million worth of apartments. It was 4,000 units in 5 different states, and I did that in a 30-month period. Now, I tell you that because I want you to know that the effect on that had a big effect on my world. First of all, I grew way too fast. I really scaled the business too quickly. 2007, I closed 17 deals for 2,800 units. I barely had time to catch my breath or think about stabilizing any properties over time. I made a couple more mistakes along the way. I didn't raise enough money, so I was undercapitalized and over-leveraged. And when I talk about being over-leveraged, that's my loan-to-value amount. That's how much the bank is willing to give me on a property that I own. So I was 85% loan-to-value on $60 million worth of real estate. I don't know who was more at fault, me for taking the money or the banks for giving it to me. So I had these 3 challenges up against me. We come around to 2008, the market hits a wall. We enter the worst economic crisis the world has ever seen, and my company comes off the rails. And along the way, I'm not paying attention to the details. I'm not listening to people around me who are telling me things that I should be paying attention to. My wife, namely, my closest attorney, my confidant, people in my inner circle telling me that they saw things that I was missing. And I said I had this under control and I didn't. Well, ultimately, what wound up happening was I was indicted on wire fraud and mail fraud charges. Here's why. What I started to do was I started to move money between companies. I had 38 different companies, and some were performing really well, some were not performing really well. So I started moving money back and forth. Now, I was advised by my attorney, by my accountant, that was okay as long as I left a paper trail. The problem was that I didn't tell my investors. So for non-disclosure, I was charged on federal charges. I wound up being sentenced on a 10-year prison sentence. So I went to prison. I thought my life was over. And during that time, I really re-engineered who I was and what I was planning to do. What I did was while I was gone, I wrote 2 books, one on multifamily investing, one on property management. I went to college. I got a bachelor's degree in theology. I wrote an ethics study course. I taught real estate. I taught ethics in prison for 5 years. I was on an outreach program and went into the community. I told my story to small business owners and college students in the area. And during that time, I met a professor at the University of Minnesota We co-authored a paper together that was just published in the Business Journal of Ethics and gets taught at the collegiate level for forensic accounting classes and sales and marketing classes. Now, I tell you that because during that time, I re-engineered myself. I decided I was going to go home and I was going to teach people how to buy multifamily, how to do it right, how to build this coaching and training platform to keep people from making mistakes, to live a balanced lifestyle, to grow their business, to take care of the economies of scale, and to enjoy the fruits of what they build. So let's start moving through. And I want to start by let's talk about what the opportunity in multifamily investing is today. And if we take a look at those opportunities, why is multifamily so important today? You know, it's really the darling of the industry right now. It's the sexy asset class to be in. It's the place everybody wants to be. You know, kind of if you're in that market, we kind of call it that the smart money is moving into that asset class. And they always say, if you want to be successful, follow successful people, right? But why? You know, we're seeing today in the marketplace that supply chain constraints on material costs have caused sales pricing on everything to go up and skyrocket. So as a result, we're going to start to see interest rates creep up. As interest rates creep up, you're going to want to hedge yourself against that protection, or protect yourself by giving yourself a hedge against the rising inflation that the country's going to see. It leaves it easier in many markets today to grow rents. We can push rents a lot higher than normal. Hey, if you look at nationally right now, national rent growth today is about 5% across the board in the United States. But if we look at the Florida market, where I'm buying a property right now, in the last 12 months, the rent growth in the Tampa market has been about 20%. So why would you not want to invest in that type of a market, have an opportunity to grow an asset, and give a better product to the people that rent from you? We're going to talk about how to create cash flow. Multifamily markets give you access to capital today that you might not have in another asset class. We're going to talk about how we add value and increase appreciation, how we create stable income and returns, and the scalability of being involved in multifamily property. Now, over the years, I've worked with hundreds of investors, whether they be clients buying a property, whether they be investors that I'm coaching and training. And it seems to me that those investors tend to fall into one of these 5 categories. They're either looking for more financial security in their life, more independence. They want more cash flow. How many people want more cash flow? Raise your hand, right? To get out of the job or the rat race, to spend more time with their family, or to get more control of their future. You know, the first thing that you need to do is you need to gain clarity on what it is that you want. What is your desire? Why are you looking at multifamily? You know, so which one of these reasons, and grab that piece of paper that you wrote the answers down earlier for that exercise we talked about, and write down which one of these is the place that you want to be, that's driving you to be in the multifamily space. And you know what, if it's all 5 of them, good for you, because that's going to give you a lot more drive, a lot more ability to want to go and build your business. Okay, so put those answers down, hang on to that, because I'm going to give you some opportunity how to do this. So I want to talk about exit planning, because exit planning is one of the first places that we need to start. It's a fundamental that I want you to think about and to remember as we go through this entire presentation. I have been to hundreds of seminars. I've spent hundreds of thousands of dollars on coaching and training and books and tapes to always kind of walk away feeling kind of like I was missing something. I don't want to say empty, but I was missing something. You know, there's a lot of great trainers in the marketplace, a lot of good teachers. And what they teach us is they teach us how to get in a deal, how to find a deal, how to source it, how to operate it. But nobody ever teaches us how to get out. Don't you think it makes sense to learn where you maximize your profit? Where do you get out? How do you keep the end in mind? I believe you need to have a clearly designed, a clearly written exit plan before you ever get to the closing table. And we're going to walk through the metrics and the things to look at and how to put that together. I read a book a number of years ago by Stephen Covey called The 7 Habits of Highly Effective People. And Covey was a pretty famous author. You may have read the book, but chapter 2 in that book says that start with the end in mind. And I don't know, that always was one of those things that stuck with me. And as a result of starting with the end in mind, I've been able to go through and build a business. When we talk about starting with the end in mind, I like to tell this story. This is a coaching client of mine that I've been working with. And he said to me one day, he goes, I really want to leave my W-2 job. And I said, okay, great. I said, do you have a plan to get out? He goes, well, not really. I said, well, if you want to leave, we have to design this plan. We have to build this around so that you can leave your current job, right? He said, yeah. I said, so let's start with this. Let's start with the end in mind. How much do you have to have in order to leave your job? He said, well, I think I could sell my wife on the idea if I made $200,000 a year. I said, okay, great. I said, did you know, as a real estate developer, operator, syndicator, somebody who puts private placements together, who syndicates a real estate deal, and if you're not clear on what that is, that means that you find a piece of real estate, you are the operator of that, and you bring partners into that. But as that operator, as that sponsor, as that developer of the property, you are allowed to get an acquisition fee for putting that together. And that acquisition fee could be anywhere between 1% to 3% of the purchase price, depending on how much the property is. So I said, let's just take a small property. Let's take a $5 million 35-unit property. And at $5 million, those 35 units are about $140,000 per door. And these are numbers that we always want to know about our properties. I said, do you know that if you put a 3% acquisition fee on that $5 million, you earn an income of $150,000? He goes, wow, I never thought of that. I said, do you think that'd be enough for your wife to let you leave your job? He said, I think I could start the conversation there with her. I said, great. I said, here's the other thing to think about is that the cash flow on that $5 million property is about $49,000 a year. When it's all said and done, all the bills are paid. And I said, now you're at $199,000 a year. Do you think she'd let you leave the job? He said, I think for $199,000, I would probably be able to leave my job. I said, great, let's design a plan to get you there. And we did. We went out, we built a plan to help him buy that property, to help him be successful, create an acquisition fee, and create some cash flow for himself. Now, what I want you to know is wealth isn't created overnight, right? It takes time, it takes patience, it takes perseverance. I was probably in the real estate business about 3 years, and I walk into a client's house one time, and he looked at me and he said, man, Morawski, you are the most tenacious person I know. And I very graciously said, wow, that's interesting. I said, thank you. And didn't know what the word meant, ran right home, looked in the dictionary, and sure enough, that was me. I'm somebody who follows up, I'm consistent, I continually ask for the sale. When I was a listing agent, I continually asked that seller when they were going to sell. As a real estate investor looking for property, I'm going to teach you some techniques to find motivated sellers, to find on-market, off-market deals that best suit your buying plan, your strategy for buying, and I'm going to teach you how to stay in touch and follow up. Now, I won't be able to teach you all those techniques tonight. I won't be able to give you all that information, but I'm going to give you a broad overview. I'll dive into a few things, but you're going to want to come to the 3-day, because at the 3-day, we're really going to do a deep dive into all of this. So 3 topics that we're going to cover. We're going to cover understanding multifamily. Multifamily is an interesting asset class. There's a lot of different asset classes out there, but multifamily is that space that it seems like there's a lot to learn. And I heard somebody say one time, they said, I really like the multifamily investor because they have a desire to learn, to be more educated, to learn more about the business. So we're going to talk about some of those systems and strategies that you need to know in understanding multifamily. Multifamily acquisitions, how do we actually execute on it? And then property management. What about those operation things? So why multifamily? There's an economy of scale with multifamily that isn't provided by other asset classes. Let's talk about some of the other asset classes. There's commercial real estate. There's office buildings. There's retail. There's industrial and manufacturing. And then, of course, there's single family properties. But none of these asset classes give you the economies of scale. None of these asset classes give you the ability to own multiple units, to have that revenue stream, that creative cash flow, that long-term wealth. Now, what I want you to look at is look at the multifamily sector as a bucket and what's inside that bucket. You've got senior housing. You've got assisted living today. Both of those asset classes in that multifamily space are becoming more popular. Now, I talk about that because there's different opportunities in the multifamily space. It's not just one, but there's other things that may interest you. But the metrics, the systems, the techniques in this are all the same. They all work well together. You have tax deals you can do. You can do student housing, medical housing. There's self-storage, and there's mobile homes. But there's market rate rent. And market rate rent is what I always spent my time in. That's what I really like as an asset class. So let's start to dive into that and why the economies of scale around that make sense. So the economies of scale start to make sense because say that you want to own 10 pieces of real estate, or 10 doors, we call it, and you are going to start out in a single family business. Well, if you have 10 single family houses, you're going to have 10 roofs, you're going to have 10 front sidewalks, 10 hot water heaters, 10 different tenants that might have a repair issue or something that needs to be taken care of, 10 different loans. What if tenants aren't paying rent? One of the things that kind of turned my side to multifamily was if I was in a market where the market was soft and I couldn't put a tenant in a house and I couldn't collect rent, I was paying a $1,500 or a $2,000 mortgage out of my pocket each month. And that can become pretty painful. Now extrapolate that out over 10 or 1,000 or 100, 10 or 100 units. What is that like? What if you have times where you can't pay rent, right, on a single family property? And then how about the times that you have to go to scattered sites to do a bunch of repairs, maybe on the same weekend, or if people aren't paying rent, collect rent. But if you own one building, one 10 unit, and I'm just using 10 as a number right now, you have one roof, one furnace, one hot water heater, all in one location. If you have 10 repairs, you can do them all in one location. Here's what I really like. If I'm only 80% occupied, so I don't have two people that live there, I still have cash flow coming in and I can pay the one mortgage payment that I have. So that's where the economies of scale come in. That's the difference for me, and what I want to convey to you as a real estate or a multifamily investor as where that difference lies and how that'll benefit you in the long run. Because now think about scaling your business from 10 to even more units. What does that look like for you in your own life? One of the first properties as a real estate investor that I was looking at was a 4-unit building. And it was in a suburb close to my office, but it was a foreclosure. And I used to do a lot of single family and multifamily foreclosures. This particular building was foreclosed on. Owner had moved out. We thought we could maybe buy the building from the bank on a short sale. That's where the bank decides that they would take less money on a property and you could pay cash for the property and buy it from the bank. But so we're walking through the property. I'm just kind of evaluating it with the owner. The owner's showing it. Everything's out of the property except one piece of furniture. Happened to be a bookcase on the first floor of the property. The bookcase had four sets of books and tapes on it. It had a set of tapes from Dave Delgado, Carlton Sheets, and Robert Kiyosaki. And I tell this story because those are really kind of interesting people to learn how to do multifamily investing from. And at the time, I was pretty new. I was learning still, not that and I'm still learning today, but I asked the seller, I said, hey, do you want to sell those? He goes, what, the bookshelves? I said, no, the books and tapes. He goes, oh, no. Emphatically, he said, no way. He goes, when I'm done with this foreclosure, I'm going to take all this information. I'm going to settle in. I'm going to read it. I'm going to listen to it. And I'm going to learn from it and go build an empire doing real estate investing. And I thought, wow, that's interesting, right? He didn't want to do it now. He thought he would do it later. You know, execution really becomes a big part. We have to make a choice and a decision to move forward and do it to grow, right? I wonder, I have to ask myself, and do you think that he ever went out and listened to those tapes and became a real estate investor? I'd have to think now, because track record of people is that they just sometimes don't get started. And I want to help you get started. I want to help you execute on the information that you get. So that's really an important piece, and we'll talk about execution a lot at the end. But I want to start to talk about understanding multifamily investing and the dynamics around it. One of the first places that we need to start is mindset. I really feel that mindset is so huge for each one of us because we have those roadblocks or those myths that we don't believe in or we think will stop us. You know, people say things like, I don't have the knowledge. Well, you know what? I think each of us can go get the knowledge. You have to become a sponge. You have to become somebody to take in the information, absorb the information, learn what you need to learn. I can't find a good deal. You know, if you think you can't find a good deal, you probably aren't going to find a good deal. But there's plenty of great deals out there. You know, I've invested in markets that were really robust, good bull markets. I've invested in markets that were really soft, bear markets. And you know what? In both of those markets, you can find great deals. You know, people say today that all the good deals are taken. Well, they're not taken, right? People say, I'll never close on a big deal. Hey, when I first started investing in multifamily, I never thought I'd buy a 200-unit apartment complex. And before I knew it, I was buying 400-unit complexes. And you can get there too if that's your desire. It might be, it might not be. You might be an investor that's fine with a 10-unit, a 20-unit, a few 4 or 6-unit buildings. Either way, we can help you scale that and get there. You know, here's the one I really like. I don't have the money. You know, if you think that way, you're going to always be held back. You know, you might not have the money, but here's what I always say. If you know people with money, you'll never be broke. Because those people around you, if you find a good opportunity, will want to help with that opportunity. So when we start talking about understanding multifamily, there's a series of systems and strategies, knowledge that we need to gain. One of the first places that we need to talk about is product class and market class. I always say to people, hey, do you know your ABCs, right? Because products and market classes are classified as A, B, C, and D. Your A-class property and market is upper end. It's going to be more expensive, be higher. It's going to be newer. You know, an A-class property today is maybe 15 years old. And will you find an A-class property in a D-class market? Probably not. Nor will you find a D-class property in an A-class market. But you probably find a B-class property in an A-class market that you could push the value in that B because it was just maybe run down or beat up a little bit. So there's ways that you can change product type to move it a half a point or a full point into the next class to create value. You can obviously take a C-class property, make it a B-class property, and clean it up, make it look well, give it a great curb appeal. The visual aspect on the outside really lures people into the inside. When you bring them on the inside, that's where you really captivate them. That's where you build your tenant base. That's where you build a reputation, and that's where you build tenant retention. We want to talk about language and terms. My next slide is going to cover a lot on language and a lot on terms and things that we need to know. How do we source deals? And I'll talk about that too, about locating and sourcing the best deals out there. Contracts. How do we go to contract? How do we negotiate? The steps along the way. Funding. What are the best loan opportunities out there? What are the best institutional opportunities, private equity opportunities out there? How do we fund a deal? And then the traps. The traps are those early evaluation things, the things that we need to look at up front, like what are the schools like? What are the demographics like? We'll cover some of that in a few slides. And then due diligence. After we go to contract, after we buy that property, what is that due diligence? And how do we look at it to make sure that we're really buying what the seller was offering to sell? And of course, exit planning. And like I said, you need to know what your exit is, where you're going to maximize your profit before you ever get to the closing table up front. So we're going to get into some of this. Like I said, in 90 minutes, 60 minutes, there's no way that I'm going to cover all of this. The 3-day, we'll definitely go into a deep dive on it. That's where you'll really want to come and spend some time and get as much information as you can. Let's talk about language. In language, there's in real estate, I always looked at this, I said, geez, this is like going to a restaurant. I open up a menu and there's 5 pages of things to order from, and you get confused and you're like, I'm not hungry anymore. But this language in real estate is something that we all need to know. You see, because when I look at effective gross income, or what else can be considered EGI, or annual income, that's the place that you really want to start. But how do we get to effective gross income? Well, write this down, because we get to effective gross income by this, with the gross income. If every unit in your apartment building, 10 units or 100 units, was rented, and it was rented at market rate rent, that would be your gross potential income. That's your starting line. Now from there, the occupancy comes into play. Did you know that with occupancy, there's 2 types of occupancy or vacancy, however you want to term it? I always like to look at the positive side more than the negative side. But that occupancy is, you have physical occupancy, right? So I own a 10-unit building and I am 90% occupied. That means I have one tenant that doesn't live in there. So it's simple math, it's basic math. But what you really want to know is what the economic occupancy is. There's a loss to lease factor that comes out because you might have somebody who lives in a property, but they're not paying rent. And if they're not paying rent, they're considered in that loss to lease column. So the occupancy, now you have that economic occupancy, could be another 5%. Always make sure when you underwrite and you put your data into an underwriting tool, or you hand do the data, you will know what the physical and the economic vacancy is. Could be 10% physical, 5% economic, gives you 15% overall vacancy. So now you're only occupied 85%. Now you're going to have other income that gets added back in. You say other income, what might that be? Well, other income can be things like fees for parking. You can rent parking spaces. In that apartment complex one time that we had 20 buildings, each building had a door at either end of the building, which gave it 2 parking spaces outside of each door. I rented each one of those parking spaces for $25 we started at. There was such a demand, we worked it up to $75 a month per parking spot. Okay, people want to be close. They don't want to carry their groceries too far. There's all kinds of opportunity. You can create a valet service. You can create a concierge service. I'm an out-of-the-box thinker. I like to take a property. I'll give you an example. We're under contract on this property in Tampa, and one of the buildings is an old storage building. It's a shed, and there's plumbing at the shed, and there's electric, and there's heat. I said, why don't we create a laundry room here? There were no laundry facilities. People had to go to the laundromat. I said, if we put washers and dryers in here, we can create revenue from the laundry income. So you want to be an out-of-the-box thinker. You want to look beyond what you see in front of you. Being out-of-the-box thinker gives you opportunity to create more cash flow and create long-term wealth. Hey, what's the difference between ROI, your return on your investment, and your IRR, your internal rate of return? Did you know that the internal rate of return will typically show you a larger return that you're getting on your investment in a real estate property because they take into consideration the time value of money? So how much money you use and how long you use that money for really creates that space around understanding your real return on your investment. How about reserves and replacements? Do you have enough money put on the side to do any capital improvements? Do you have enough money put on the side for the bank to be satisfied on their loan requirements for for the reserves and replacements line item? Cap rate. Cap rate is an interesting part of multifamily. Some people use it, some people don't use it. I always looked at cap rate. One of the things in my buying strategy was I always wanted to find a property with a cap rate that was a 7% or greater. In cap rate, there's an inversion. So if a cap rate is 5%, your price is generally higher. If your cap rate is 7%, your purchase price on that property is going to generally be lower. Matter of fact, my book Exit Plan, I tell a story in there about a property that I owned. And I had an investor one day read my book, get off an airplane one morning, call me. It was like 7:30 and I answered the phone. He said, I just got off an airplane. I flew all night from California back to New York. He said, did you really buy that deal at a 13 cap? I said, yeah. He said, what do you think it's trading at today? I said, I know the deal. I said, for sure it's trading at a 5 cap, which means that I bought it for $15 million, but that 5 cap today, that property is probably a $25 million property. So you can see how value really increases with what you do to a property, what's going on in the market, and what the trends are. So how do you satisfy all of that? Multifamily acquisitions need to have strategies in place. You need to have evaluation strategies. You need to have buying strategies. The first deal I ever bought, and I'm going to talk about it in a minute, I didn't have a buying strategy. I didn't have a strategy to evaluate. And I learned over time. See, I went into the multifamily space and I didn't have this education. I wish I would have had this education. We're going to talk about how do you locate and source the best off-market deals, and how do you put plans in place. I look at it as fishing, right? The more lines you have in the water, the more fish you're going to catch. But those fish, you want to make sure that you don't get the lines crossed and tangled up, because you want to make sure that you're finding the best opportunities out there. How do you fund, do you have a strategy and a system in place for funding a deal? Do you have a relationship built with a lender that you're going to be able to close on that deal? How about creative financing? That first piece of property I bought that I told you about, I financed it creatively. So it was a 4-unit in a suburbs outside of Chicago that I went and bought after that Robert Allen seminar. I put $1,000 down with the seller, and the seller held the paper on the rest of it for 3 years before I had to go get a mortgage. It was a great opportunity. So how are you being creative in your funding? How are you being creative in your buying strategies? Do you have systems and strategies to help you do that? What's your strategy in place for due diligence, for doing the physical and the economic due diligence on a property, the financial, looking at the financials, looking at the leases? Do you have a checklist and a system? Well, we're going to provide all of that for you. And then exit planning. What is your strategic exit planning? And how do we close on the property and get it ready to resell or to exit to have the best closing, or to have the best maximization of your profit. And one thing I want to say about exit planning is it doesn't always mean that you're selling the property and getting out of it and losing control. What it means is that there's other ways to maximize your profits, and you just need to know how to do that. This is the first property I ever bought. And this is actually the original picture of it. It was an 11-unit building north of Chicago. It was the building that taught me that I didn't know anything and that I had a bunch to learn. I was so excited about this, okay? So when I bought this, first of all, I was excited that I was able to buy it, that I was able to go to contract on it. I got awarded the deal. And then I said, okay, how am I going to fund it? Well, I'm going to have to get a bank loan, but I'm going to have to raise some money. So I said, how am I going to raise private equity? I don't know a lot of people. Family and friends is a typical private equity way, but I didn't have family and friends that had a lot of money. And I thought, how am I going to raise the money for this? Well, what I did was I put a little ad in the newspaper, a little classified ad, cost me $45. I ran it for 5 days. My phone rang off the hook. From that little classified ad, I wound up raising $500,000. I was so excited, I didn't pay attention to any of the other details, right? I took the seller's word for everything. The seller said, hey, you can raise the rent $75 a month. You could go in, do some repairs, CapEx we call it, capital improvements. And because of those capital improvements, you'll be able to raise the rents. You can put a roof on it. You can do some structural repairs to the stairs. You can fix some of the balconies, put new doors in, put new kitchens in. We went in, we did that. We couldn't re-tenant it. We striped the parking lot, seal coated the parking lot. We fixed the balconies. We tried to move new tenants in. We couldn't raise the rent. We figured out that we bought a bag of bricks, and it caused me to go build a buying strategy. I called my commercial broker. I said, Ryan, we need to figure out a buying strategy. This is where I put into place what I wanted to buy. I wanted to find garden style 2-story properties, right? We'll talk about that in a minute. The next piece that I really looked into that was very important was the underwriting piece. See, when I bought this, I didn't do any underwriting. I didn't have a tool at that time that I could put data into that would give me a result and tell me whether or not it was a property worth buying. And today I have that tool, and I offer it to you as well, which you can get at the 3-day event. But what I did was we went and looked at a property about 45 minutes from my office. It was a vacant student housing project at a college not far, in DeKalb. And we got there, walked the property, got back in the car, drive back to the office, and I started to pencil out by hand the system and strategy for the purchase price and buying it, how much money I would put into it in repairs, what I could rent it for if I did student housing versus market rate rent. I'm not a big student housing fan. It works. Some people make a lot of money at it. I like market rate rent. There's a shortage of workforce housing in this country today, and you can take existing properties that are out there, create that environment, and raise rents and really take advantage of a boom that's going on today in today's market. So all the way back to the office, I penciled out on 4 yellow notepads, 10 years worth of data, threw the yellow notepad on the floor as I pulled into the office and said, the deal doesn't work. Now I tell that because it was a great exercise for me. See, today I have a tool. Today I can put all the data into a underwriting tool and decide whether or not it's worth going to the next step. And I'll give you that tool and give you a 1-hour class to learn how to use it. And during that class, we're going to pencil out a 10-year pro forma on a property so you really learn the depth of those metrics and how that'll work for you. But what it caused me to do, it caused me to build that buying strategy, to move on to buy B-class property, C-class property, garden style, 2 to 3 story units, buildings that had um, interior hallways where your entrance to your apartment was inside, properties with swimming pools, properties with pitched roofs and asphalt shingles, properties in other markets. This was a big thing. I realized from that first deal and the other couple that I looked at in the Chicago market that I wasn't going to make money in the Chicago market, that I would have to go to other markets. I built a 4,000 unit portfolio from the coach seat of an airplane. Now, somebody might want to do that. Somebody might not want to do that. You might be in a market right now that it makes sense for you to be buying in your market right now. And if it is, that's the market to stay in and work through. The other thing is I knew which class I wanted, and I knew the submarkets in that class that I wanted because I knew I could go in and what I could put in capital improvements and what I could raise rents to. See, if I can't raise rents, it doesn't make sense to buy that property, does it? So style became very important. What did I want to look at? What did I want my tenant to look at? One of the metrics I would buy would be a 60% or greater 2-bedroom units or more. And I had investors ask me all the time, why 2 bedrooms? And I'd say because a 2-bedroom unit, I have a better opportunity of reselling it to an end buyer when I am exiting a property because there's more buyers for 2 bedrooms than there are for 1 bedrooms. But I will tell you, understand what's negotiable and non-negotiable for you in your buying criteria, in your strategies, because I bought one time I was looking at a property in the Dallas-Fort Worth market, and it was mostly 1 bedrooms. And I said, geez, I want 2 bedrooms. And the broker said, hey, look, let's do the research together on the market. And let me show you why a 1 bedroom in this market makes so much sense. And we did that research, and I was all of a sudden kind of changed my perspective about markets and about product classes, because now all of a sudden I said, wow, a 1 bedroom commands more rental money, stays rented longer in that market than a 2 bedroom does. So it made me really understand we always say don't prejudge people. Know what's negotiable and non-negotiable. Don't prejudge a property. If there's things there that you can live with, and then we all have things we can't live with, but be open-minded. So sourcing and locating properties. Hey, this is a relationship business. Finding the best properties on the market and off the market is relationships. And it's who you know and who you can go build that relationship with. I talk about success leaves clues. And when I first went in the real estate business, that cassette tape that Todd made me that I listened to over and over again, part of those fundamentals were about prospecting. Calling sellers every day for hours at a time, doing some of the things that most people don't want to do in order to find those best deals. Now, if you're an investor sitting out there saying, hey, I can't find the best deals out there, are you really putting in enough effort is what I would ask you. Are you really pushing the envelope forward? Do you have the right systems in place? First of all, if you start picking up the phone and calling people in a potential area, asking them if they want to sell their house, you'll find an off-market deal. It's always a numbers game. The other piece is I can teach you how to implement some mailing strategies for deals that the owner doesn't live in and might be an out-of-state owner, whether they're small multifamilies, big multifamilies. And the same techniques and systems you can use through different product classes and different asset classes. So there's a number of different sourcing and locating property opportunities, plans and systems that you can put in place. And most of them don't cost you any money. So there are opportunities for you to spend some time, do some work, roll your sleeves up, utilize the techniques and build the systems. So once you find a property, now you want to know what the traps are. And this is something that I think is really important. The traps are the things that we need to look at before we ever buy a deal. A lot of times you look at these traps when you go into a market, because some of them are about the market. If you go and write this down for yourself, but there's a website out there called greatschools.org. and it gives you a school rating. And if you put in the address of the property on greatschools.org, it will tell you a 1 through 10 metric, whether or not the school is 1, bad, 10, great, and somewhere along the line. Now, if you have an opportunity to buy a multifamily on Apple Street and the schools are a 4, but you have an opportunity to buy a multifamily on Banana Street and the schools are 8, where do you think that you're going to be able to change the tenant base in that property easier? On the Banana Street property at an 8 or on the Apple Street property at a 4? So what about crime report? You know, that first property I bought, I would have saved myself a lot of problems if I would have just simply called the police department and asked them for a crime report. Here's what they said. Oh, we're out there 28 times a month. I thought 28 times a month, that's a perfect record in February sometimes. So, you know, do the due diligence, understand the metrics and what you're looking for. Let me talk about household income really, really quick. Why is that important? Because if you have a tenant rental standard in place that says, hey, I'm going to rent to you at $1,000 a month, but in order to do that, you have to meet my criteria. My criteria is that you earn at your W-2 job 3 times the amount of rent. So if I'm going to rent to you at $1,000 a month, I want to make sure that you bring home $3,000 a month. That's $36,000 a year. So if I look at the household income in that submarket and it's only $28,000, is he going to be able to pay that rent? Or if it's $40,000, he probably can pay the rent, right? So I want you to look at that, because if you're going to buy a property and push the rents, so you're going to buy a property, the rents today are currently $1,000, but you want to move them to $1,500. If your average household income is $36,000, you're not going to get $1,500. But if your average household income is $50,000, you'll get $1,500. So does it make it easier for you now to change your tenant base, bring a better tenant in, a better quality of tenant? You go in and do your capital improvements and bring that tenant in. Here, I'll give you an example. We're buying this property in Florida, 40 units. We know that we're going to go in and put a bunch of capital improvements into the property. It's a very big value add. It's a visual value add. So we're going to do landscaping, we're going to do outside painting, we're going to make it appeal to the neighborhood. We're going to put new kitchens, new baths, floor coverings, lighting packages. We're going to redo the insides, and it's going to be visually appealing on the inside. So now we'll be able to raise those rents from $900 a month to $1,200 a month. That's a big bump. We'll create value. We'll create a larger exit price on the property. And this is what we teach you how to do. And you'll have opportunities to do for yourself. Then the next piece is underwriting. You want to learn how to effectively underwrite. You see, you're going to get, when you look at a multifamily deal, you're going to get an OM, what's called an offering memorandum. That'll come from your seller, from the broker. Now you have to watch those, because sometimes, they make mistakes and the numbers are off. But you want to take the numbers from the OM, you want to put them into the underwriting tool, and you want them to balance. You want the OM to balance with the underwriting tool, with the income. So you start with that gross income, work your way down to the effective gross income, because you've deducted occupancy or vacancy, and you've put in other income. Remember, we talked about that a few slides ago. Gives you that effective gross income. Now your expenses come out of that, and what's left over is your NOI. NOI is net operating income. This is a really important number, because this gives you your debt service, or gives you the amount of money that you can pay your debt service. So how do you pay your loan back on your property to give you the net cash flow? Here's what I'll tell you is, if those check out and they meet your criteria, because you're going to build that criteria for yourself, this is where I need to be on this property, you make the broker call. You call the broker, you ask the broker for the story, because you want to know who's the seller, why are they selling, what they've done to the property. Hey, this one I'm buying right now, it's a mom and pop operation. They've owned it for 11 years. He hasn't done anything to it. He's a minimalist. He just puts in enough to get by. And some of the tenants, he attracts those kind of tenants because of that. We know we can go in, we can recapitalize on this because of his neglect. So we can now re-engineer it and make more money on our exit. So do you see how that can work for you and be of your benefit? The next thing, once your underwriting checks out and you decide, hey, I'm going to move forward, you're going to write an LOI. That's a letter of intent. Your LOI spells out everything. It tells what you want to purchase the property at. It's your offer to the seller. Hey, I want to buy your property. This is when I want to close. This is how much I'm going to put down as a down payment. This is when I can let my earnest money go hard. If you don't know what that term means, understand it before you buy a multifamily, because what hard earnest money means is that when I give you a deposit, it normally will sit in an escrow account. If you don't close on the property, you get it back. But today, earnest money goes hard the first day. We wrote a contract on a property, we gave earnest money with it, and boom, it went hard the first day, which means it left my account, left the escrow account, went right into the seller's account. If we don't close on the property, we forfeit the money. So understand some of these things before we move forward. I didn't understand a lot of this when I first got in the business, right? But I understand it more today over time. The PSA is the contract. That's your purchase sales agreement. So what happens is that LOI now gets converted to the PSA. You do all the negotiations back on the LOI, all the terms, all the conditions, when you're going to do the lending. One of the metrics in the LOI that goes over into the PSA is, hey, I want to get all the books and records, the due diligence, and I have a checklist for this that I accompany with my LOI, send it to the seller, and I say, hey, this is everything that I want. All your books and records, your financials, your leases, all your loss reports, meaning, any claims with the insurance company. Have we done any repairs and maintenance out there? I want to know what that all is, and I want that within 7 days. And then I want 21 days to do my inspection. That's why I'm in Tampa. I'm down doing a physical inspection on this property. I walk through with a number of contractors, with some property management people, because we're going to go to professional management on this and run this thing differently. Deal structure and entity. Understand what you're doing, what your PPM, your private placement may be, what the structure is if you're raising money, and the strategic alliances or partnerships that you might be putting together. The next piece becomes the due diligence. This is where you really want to look at that property, where you really want to dig in and say, hey, I'm really buying what the seller was selling me. What the seller told me in the OM is really what I'm getting, or it's not. But I want to know what the unit mixes are, what the property's about, what the maintenance and history is. I don't want to just look back over the last year. There's a thing there called, I want to begin with the trailing 12 months, the T12 we call that. But what that means is that could be a report from June to June, May to May, right? Or it could be your full year report, January to December. I want a history, and I want a 24-month to 36-month look back. I want to be able to look at those rents, those leases, those tenant records, the tax bills, the repairs and maintenance, the summaries over the last 36 months. I want to see how prices have increased, how rents have increased. I want to look at expenses and how they've increased or decreased. What's the seller done? Have they replaced appliances, mechanical systems, air conditioners, furnaces, things like that? I need to know what I'm buying. All this needs to get put into your property management software, which we'll talk about operations in a minute. The next stage is financing. You know what? For a lot of people, for me, when I bought my first multifamily, this was a huge thing. Financing. Here again, there's a lot to look at. What's your loan to value? I told you that those first deals I bought were 85% loan to value. I was way over leveraged. You should be 65 to 70% loan to value on your deals. So make sure you raise enough money. That gives you money in reserves to sit on the side in case there's a problem. Interest rates. And I always tell people this, don't don't fight with your loan officer, your broker, over 0.5% or 0.25% interest rate. It's not worth it. In the big scheme of things, it doesn't mean that much money. What you want is you want that relationship. You want the service. How are they going to take care of you? And here's what I mean. The second deal I was buying was a 64 unit in Indiana. And I had gotten a loan commitment from a bank, and it was Jones Lang LaSalle when they were still in business. And I got a loan commitment and had the loan commitment for about 2 weeks. And this is a Friday. I'm coming home from work. I'm supposed to go out to dinner with my wife. I pull in the driveway, my phone rings, it's my loan broker, and he has the vice president of the bank on the phone. And they proceed to tell me that they cannot close the deal on Monday. Well, I'm crazy, right? I don't know what to do. I don't know what's going on. I said, I have a written commitment from you. I know, but we can't execute on it. Long story short, we went back and forth 3.5 hours. Never went to dinner with my wife that night. She wasn't very happy with me. Sat in the car for 1.5 hours, went into the dining room in the house, paced the floor, yelling at each other, trying to figure this out. Finally got the bank president to say, all right, we'll close the deal. He closed the deal on Monday morning. 2 weeks later, the bank went out of business. So there was a reason that they didn't want to close that deal. And it wasn't about me. It wasn't me being the buyer. It was their own internal issues. So there's a lot to know about funding. Make sure you have a good relationship in place up front with a lender, with a loan officer, with a bank, mortgage broker, because those relationships will go a long way. Now, exit plan. I want to talk about this. We're going to talk about some of the metrics and the things to look at the 3-day. I'm going to go really into depth on it. But exit planning is very important. I have a book called Exit Plan. You can download it for free from my website and read it. It's a great read. It tells a bunch of stories and a bunch of metrics and data in it about how to exit a deal and the different opportunities you have to exit. But exit planning is most important. And I tell you that it's not always just selling off and getting out, that there's different ways to exit. You could, when you exit, you want to maximize your profit is really what you want to do. So you could liquidate, fully get out, or you could recapitalize. You could do a cash out refinance. You know, if you do a cash out refinance, that comes out tax-free. So there's benefits for doing that. You could restructure the property. You could bring a partner in. I did a deal one time in Texas, and I'm not going to go into detail, closed it with private investors. 6 months later, had an insurance company. It was my first institutional deal with an insurance company come in and recapitalize the property. Made a couple $1 million by doing that. So there's ways that you can exit, maximize your profit, keep the deal, and run on for another period of time. You want to develop those assumptions though. So you want to look at your resale threshold. When does that be? If I evaluate a property over 10 years on my evaluation tool, and over that 10-year period, there's typically a place that I can maximize my profit. Could be 6 years, 7 years. But why not create a financial event at that point that helps you maximize your profit? What are the tenant changes and the CapEx improvements that you need to put in order to do that? If you're buying a bigger property and there's staff in place, how do you change the staff? So 2 things, write these down. I want you to think about along the way. One is your income and expense ratios. Very important to look at. You know, they always say there's 2 ways to make money, right? You can decrease expenses or increase your income. I like to do both, because if you do both at the same time, your profitability is even higher. How about your purchase and sales criteria? What does that look like? What do you need to change about that to make it more beneficial for you? When you look at your expenses, how do you look at them? I used to have a formula that said my payroll, if I was buying a property that had staff on it, my payroll needed to be 9 to 13% of the EGI, the effective gross income. bought a property one time, payroll was 20%. I knew exactly where I was going to add value to the property when I bought it. And it happened to be in the staffing. And some of the people we just shifted around and had to let some go. There's that T12 again, right? That's your trailing 12 months. I want you to understand that, because when you look at your expenses, you want to take your expenses from the T12. There's a thing called a T3, which when you look at your income side, you want to take your income from the T3 and extrapolate that out over 12 months. Okay? Again, get the 36-month history, and we'll talk about some of this other stuff at the 3-day. Here's what's really important is execution. Webster says that execution is the carrying out of putting into effect a plan, an order, or a course of action. Execution is what's really important, because we can have this great plan, and I have had some great plans in place, but if the execution isn't there, it doesn't go anywhere. So I want to teach you how to execute, how important it is to execute, and how you can benefit yourself in your multifamily opportunities by the proper execution. You know, part of that is creating that vision, right? You want to have the vision of where it's going to go, what the planning is, and then make a decision to move forward on it. And you have to be passionate about it. You can't just say, hey, you know, tomorrow I'm going to go for a run at the gym, and then not go for a run at the gym. Where's your passion in it? Where are you going to go and move forward? How do you take action? And you know what? It's about relationships. You know, one thing I want to tell you, and I'm going to cover it again, is at the event, you're going to have an opportunity to build some relationships, meet some other investors, create some structural partnerships that will help you do a multifamily deal together. You know, a decade ago when I was buying units and I bought 4,000 properties, we did everything ourselves. There were no partnerships. If they were big opportunities, or like my partner and I were, you know, just two of us together. Today, they're all strategic partnerships. The structure on this 40 unit I'm buying, I have two partners. They were coaching clients of mine, became partners of mine. We went out and we had to get a KP, a key partner, a key principal, somebody who would sign on the loan, get the debt, and take care of that piece. So now we brought this great team together to execute. We'll probably do 200 or 300 deals together just because we have a good team assembled. And everybody knows their roles and responsibilities, which becomes part of the good execution. Hey, you know, a quote I heard a long time ago by Horatio Alger, he said that a ship without a rudder is like a man without a vision. So, you know where you're going and know how to get there. Have the clarity that you need to grow. Relationship. When I talk about relationships, and I'll really go into depth about this, who's in your corner? You know, who are your closest confidants? You know, I always talk about having 4 circles around you. You're that first one. That's you. But then there's that inner circle. Who would you have over to dinner for your house for a barbecue on the weekend, or spend time with over the summer? You know, who's close to you, who believes in you and will buy into your goals, help drive you and guide you, all the way to who's in that outer circle, those people who help drive your business, but aren't really those people you'd have over for dinner. But they're all part of helping you achieve your goals. So we're going to talk about the strategy behind those relationships and how to build them. Property management. Property management is critical. This is that part of that execution. You know, how do we get into it? So whether you want to build a property management company just to manage your units or to be a third-party manager. So I built that real estate investment company. I bought 4,000 units. And alongside of that, I built a property management company managing 7,500 doors. So I managed my 4,000 and 3,500 other units. See, I built that company and I did the third party because it brought more revenue, gave me more exposure, and gave me more economies of scale. So property management, if that's something you want to do, we can give you all those techniques and systems in place. Part of the operations, though, are Systems and strategies. How do you have a tenant and a qualifying strategy for that tenant? How about a marketing strategy? How do you go out? What platforms do you use to market for tenants? What are your rental processes, your showing strategies? Hey, I had a showing strategy that said, if you call me up and say, hey, I want to go see that property, I don't just run out there with you. I understand you want to see it. I'm going to show the property on Tuesday at 6 or Saturday at 10. What time best works for you? So have the strategies in place, have the financial metrics in place, understand what amenities you can start to build out on and how to capitalize on those. So we'll go into more depth at the 3-day on each one of these processes and how to really build out your property management side. So let's start to recap. We've been at this thing now for well over an hour, and I want to start to recap. Start thinking about when we first got into this, we talked about the opportunity in multifamily today. One of the great opportunities, right, is that it's going to be your hedge against upcoming inflation. As interest rates creep up, having that multifamily, that income to offset those interest rates is really going to be good for you building your future. We're going to talk exit plan. We talked about that and how important it is to know when you can maximize your profit, at what point, and how to do that. How do you replace your income? We talked about that. How do we get you out of the rat race, out of your W-2 job? How do we create that cash flow for you to skyrocket you to wealth using multifamily? The economies of scale that multifamily provide. All that you need to understand in multifamily. You know what? We just barely scratched the surface tonight, right? As I mentioned to you, you probably want to come to the 3-day to learn everything that you possibly can learn, become a sponge, absorb it, and then go out and execute. Because I will hold you accountable if you want to execute. And then multifamily acquisitions. How do you actually do it? How do you actually go buy a property, underwrite it, look at the traps, do the due diligence, go to contract, close on it, and then operate it? Part of that, all that we just talked about, right? The traps, the underwriting, contracts, relationships. I think today that some of my success in the multifamily space is because of relationships and because of some of the people that have introduced me to other people. And that's one of the things that I do for the people I work with, for my clients, is I help them with strategic relationships. If I see you need somebody or somebody's going to benefit you in your business, I'll connect you. I'm a huge connector when it comes to people. So here's what I want you to do. I want you to take advantage of what's coming up. I'm doing a 3-day event. That event is September 9th, 10th, and 11th. It's a Thursday, Friday, and Saturday. It's a live event. It's from 9 to 5 each day. And I'm going to go into depth, all of this that we just talked about. We're going to do a deep dive. It's in Schaumburg. Schaumburg's a suburb outside of Chicago, and it's live and it's virtual. So if you can't come to the event, and I know coming out of the pandemic, some people don't want to be in a crowd, and that's okay. You have the ability to watch this from your home, from the comfort of your own home or office, and participate. I'm going to create a lot of group participation. Hey, day 2, we're going to have a panel of experts in the room that are going to talk about their experience in multifamily. You're not just going to get it from me, but you're going to get it from some others. And I want you to know that the room is limited seating. It'll only hold 60 people. So if you're going to go to the live event, I'll give you an opportunity in a minute here to sign up for that. What are you going to get for registering? You're going to get a great networking experience, the ability to talk to other people that are doing it, to reset your mind, to recalibrate a little bit, get the education that you need, the ability to build teams and relationships, some strategic alliances. You're going to get access to my database, right? The people that I know that I work with to put deals together that help me structure the business entity and everything else. Some free gifts that I'll talk about, and you're really going to get some life skills. And I talk about life skills because I don't believe anybody grows professionally or moves the envelope professionally unless they grow personally. And that's what I want you to do. I look at it like this. If you take a rubber band and you stretch it over and over again, it'll never go back to its same elasticity. That's what I want to do with you, with your mind, with who you are. I want to force feed it knowledge and information that's going to help you grow. Now, listen, I know you've all been to these seminars and these events where people by now they put a price up there, they drew a red line through it, drew another red line through it, gave you another discount. I'm not going to do any of that, okay? I'm going to tell you one price for the 3-day event. It's $297. Listen, I've spent $297 on a lot of things, but to get 3 days of education, to fill your mind with opportunity that's going to help you move to the next level, why not take advantage of that? See, because here's what you're going to get. You're going to get a step-by-step blueprint. You're going to get a 3-day interactive training. It's going to be live. It's going to be virtual. We're going to go into a deep dive on sourcing deals, locating the best ones, on the traps, on the underwriting, what to know, the due diligence. Hey, am I really doing it? You know, I got a due diligence checklist of 60 or 70 things on it that we're going to go through as we're doing due diligence on a deal we're buying that you're going to get as part of this package, plus a free 1-day or 1 hour event to learn how to do that. Contracts, funding, private equity, we're going to talk about. We're going to talk about CapEx and planning, business structure. What's right for you? Is it a general partnership? Is it an LLC? Is it a joint venture? You know, what combination of those work for you and your business? And exit planning, and then operations. How do we run this thing after we buy it? And shouldn't you know that before you buy it? I'm going to give you some free gifts for signing up. You know, $297 plus some free gifts. You'll get a copy of my book. You're going to get some underwriting. You're going to get the underwriting tool and a 1-hour class to teach you how to use it. Remember, I said too, we're going to handwrite underwrite a deal so that you know really what goes into it. You get a copy of the due diligence worksheet. You're going to get a copy of the property management tasks. And I have a task list of 55 things that get done on a property. They're not in the same day, not when you just buy it, but over time, over the life of the tenant, there are things that need to get accomplished. I'll give you a sample of an LOI and a PSA. And remember, I'm not an attorney or an accountant, so you'll want to take those documents to your accountant, get them designed for your market and what you're buying, but they're a great start in that direction. And listen, if you're not satisfied, 100% satisfaction. Attend the event, the 3 days Skyrocket your cash flow, spend the $297, go take advantage of the offer that's on your screen right now. Go to the event. The first day, if you're not completely satisfied and you don't think it's for you, I'll refund your money and you can keep the gifts. Is that agreeable for you? Take advantage of it. Don't take my word on any of this. I want you to hear from some other people that have taken advantage of my coaching program, of my training with them. You know, Mike said that he was looking for a coach to take him to the next level, and that I was able to do that for him. I've been working with him for several months. He bought his first multifamily, closed on a couple of land deals now, and is going to do some development stuff. And we're in I'm holding him accountable, and he'll tell you that every week I set some assignments with him, and he feels like when he comes back every week, he needs to have those done because that pushes his business forward. And then there's Isabel. Isabel, a single mom, active real estate investor, said that the information she learned from me was invaluable. I mean, don't you think that you could take these techniques and do exactly what I did at that first Robert Allen event I went to, leave there, and on Monday morning, go buy a multifamily property? Hey, this event is the 9th, 10th, and 11th, Thursday, Friday, Saturday of September, because September 1st is the first NFL game. And I know people wouldn't want to come to the event on that Sunday. So I want to make sure that you'll be able to attend. And then there's Carl. Carl and I have been friends a long time. But what Carl will tell you about me is I've forgotten more than most people know about the multifamily business. And so I want to give you as much information, as much knowledge and skill, and help you execute to help you grow your business. And then there's Victoria. Victoria, she's been coaching with me for a few months. Again, blown away by the knowledge that I provided for her and the time that I take on an individual basis. And that's what you'll get by working with me individually. You're going to get that time. You're going to get that ability. Hey, if you need to contact me, if you want to know anything, feel free to reach out. You can email me directly. You can call me. I'm accessible and will be accessible for you. So I want to thank you for being here tonight. I want to thank you for taking advantage of this opportunity, and click on the link right now, get registered, and I will see you at the 3-day event coming up in September. Everybody have a great evening.